In today's video, traders, we're going to be talking about support and resistance and how you can draw support and resistance levels more effectively, as well as some ways to actually trade support and resistance in an effective way. So let's go ahead and jump into the video right now. So hello traders and welcome back to my channel. My name is Nick. I make all sorts of Forex content here on YouTube. If this video is helpful to you, make sure you give it a thumbs up down below and also subscribe to the channel if you're new looking to learn more about the Forex market. So let's talk a little bit about support and resistance. Today we're going to be talking about how we can actually draw them effectively, as well as kind of their significance in the world of trading. Now, if you are new to trading, support and resistance is essentially a way to try and trade supply and demand. Whether you're new or more advanced to trading, you probably have heard of these concepts. Supply and demand essentially is looking for levels or prices where price seems a little bit too low or price seems a little bit too high. If you were to go to your favorite kind of car dealership and you were looking for a car to buy, you would probably have a decent idea, especially if you're savvy with cars, on what is a price that's too high or a price that may be a good bargain. Well, in the markets, this is present as well. There's ways to look for potential areas of support or resistance or supply and demand where buyers and sellers may be interested in buying or selling a particular instrument. So what exactly is a supply and demand line or a support and resistance line? Essentially, a support and resistance line is a level that we're going to be drawing on the chart to try and capture or identify an area of support or resistance or supply and demand. Now, supply is essentially the idea that if price comes up into a high area, like here, this level held as a supply zone, meaning that sellers came into this market and they said, this price is too high, we're going to sell this market down. Well, sure enough, when price retraced back up there, right, price made a movement back up to that high point, take a look at what sellers did once more. They said, okay, this price is still too high, and now we're going to push price down. This, in essence, is the concept of supply and demand trading or support and resistance trading. We identify a level that historically has held as a high price point or a overbought level in the particular market that we're looking at, right? So we're looking here at Aussie dollar on the daily chart. These are daily bars. And what this tells us is that this area historically has held as a zone of resistance or a level of supply. They're kind of one and the same. Supply is equal to resistance or sell zones, right? These are what we would call a sell zone. Historically, price has been rejected by sellers to push it back down in these areas. So what does this mean? Well, it means that if we can identify historical levels where this has been the case, in the future, we might get a repeated instance of that same action, right? So if buyers were pushed back down and sellers took control of this market up here, right? Then if price comes into this area once more, then possibly we could look for some seller resistance to hold that zone again. Now, of course, this is not perfect and that supply and demand levels are going to break at times. In fact, supply and demand zones are just best educated guesses, right? They're not perfect decision-making principles, but rather levels to consider when trading. That's kind of the idea behind support and resistance, is looking for zones of interest that show us a potential reversal level. So if we're looking at this chart, let me show you guys just some examples. If I was drawing some levels, I've got my horizontal lines here, and let's just start drawing some levels that we see. What we can see here is that, of course, we've already identified this high point up here. But if we also draw the low point on the chart, take a look at this, guys. What we see is that down in this area at the lows here, we have buyers holding these lows very nicely, right? We can look historically on the chart and identify that multiple times, 1, 2, 3, 4 times really, price has held this level as a level of support, meaning that price did not go any further than this level, right? We really saw buyers hold this zone of support and push price back up each time it came down. What does that mean? Well, that means that there was demand in this low area, right? So demand was in this zone as price came down to it each time. Buyers were willing to step in and push price. With that knowledge, if price comes back down to that area, then we have a possibility, not a guarantee, but a possibility that we could hold that zone as a support level once more. And these buyers may still be willing to push price up down in this zone. Now, one thing to mention here is that I'm not pointing out that this is a pinpoint price that prices has to reverse off of. I kind of look at supply and demand or support and resistance as a zone, right? So this whole zone down here held as a level of support. If we zoom in a little bit closer, you can see that it's not a perfect level of support, right? We kind of have, here's some lows down here. You can see the candles made it all the way down to this area. We also held right around here. You can see we had here. So it's more of a support zone or a demand zone rather than a pinpoint price, right? That's how I like to look at support and resistance. Sometimes people will think differently. Of course, there are multiple ways of looking at support and resistance, but to me, the best way is to look at it as a zone, right? So there's a zone of support down here. Well, now we can start drawing some more levels and take a look at this one. So historically now we have some indication here that of a sell zone or a supply level up in this area. So when price came up to that zone once more, take a look. We held that level very, very nicely. Now again, this is not always going to work out. Sometimes you're going to have breakouts, which is part of trading as well. There's going to be concepts built around this idea that when price breaks through a major level, sometimes we see continuation and sometimes those levels break down. And that's another lesson for another day. But essentially, when we're talking about supply and demand, we're talking about zones that have held on the price previously. In fact, going off of that concept, when we have a broken level, right? You can see here's an example of a level that did not work. Okay, we had a demand zone right here. Buyer stepped in, pushed price higher. Buyer stepped in, pushed price higher. Well, on this case, look at price breaking through. This is what we call a breakthrough or a breakout or a rejection. You can see price breaks through the lows here and continues lower. So it's not going to be a perfect system, but it is a one way to analyze the markets and to build an opinion or build a thesis on what could happen next in the markets. So if we know that these zones are holding, take a look at this. This is one of the concepts that we should probably take a look at. This is interesting because take a look. When price broke through here, right? We mentioned that we had previous demand. This level became controlled by sellers, right? Sellers said, nope, we're still willing to sell through this level and push price lower. So sure enough, when price came back up from the lows, this level held very nicely again as a sell zone, right? This is basically the idea of supply and demand. Let's break it down for a second. Previously, buyers said this level is a demand zone, right? Demand, right? We'll put D for demand. That kind of looks like a P, so let's make it D, right? So a demand zone down here previously. Well, sellers said at this point, they said, nope, we think that the price can keep going lower, and they decided to push it further. Of course, they were right, and we became a supply zone, right? So we had a supply zone because sellers took over this level. Think of it as they're fighting on this level, right? Bulls and bears are fighting, buyers and sellers are fighting on each of these levels to try and bounce it back up. But here we saw sellers win that fight and they took over that zone. So when price retraces back up here, sellers are possibly still there waiting to push price back down. That's kind of the concept of supply and demand. And reading the way these prices are moving is going to be how you can identify or use supply and demand or support and resistance to your favor. Identifying key zones of support and resistance are really, really important if you're going to be a price action trader, because you can identify, of course, levels that are interesting to market participants, and you can trade off of these levels. So for example, you can see here's another example of what we just talked about. We had a previous level of support here, right? Buyers holding these lows and pushing price up, right? We saw a nice little move to the upside, and then sellers took over this area. They rejected that as a buy zone and they pushed price lower, right? Well, sure enough, if we fast forward a little bit, when price came back up to that area, it held beautifully as a level of resistance, pushing price back down. So this is kind of the concept, guys, is when I'm looking to identify a support and resistance zone, I'm going to get my lines out or get my zones out, however you'd like to draw them. And I'm just going to start looking for zones where price is bouncing off of these levels, right? You can see price is rejecting here very sharply. Price is rejecting here sharply, right? And this is what I'm looking for. I'm looking for pivot points on the chart where price is changing directions sharply, indicating a potential level of support or resistance or supply and demand. So essentially, when we're looking at supply and demand, there's many ways that you can trade it from here. You can combine it with other factors. For example, if you like Fibonacci retracements, you could trade using a Fibonacci retracement. You grab your fibs, you could draw from swing high to swing low. And you can see, we have some potential levels right here at that 50% level that you can combine it with that support and resistance concept. Really, one of the most powerful ways, in my opinion, to trade is to look for multiple factors to line up and to give you a reasoning behind why you should take a trade rather than just one thing. Just because you have a level of support doesn't mean that the market has to bounce there. Combining it with multiple factors, however, might give you a better indication of a potential reversal or a potential bounce off of that level. Right? So when price came back up into this area, we actually had a couple different reasons for why this price could hold as a sell zone. Of course, we had that level of previous resistance right here, right? Of course, price held very nicely there and pushed price back down. We also had that swing high to swing low fib that gave us this 50% retracement where we saw price reject very, very nicely. So combining multiple factors can be a great way to increase your probability of success when trading using support and resistance or supply and demand. If you're looking to improve as a Forex trader, I've got an entire channel here full of free stuff to help you out. You can check out videos here. And if you're interested in my VIP service where you can follow along with my trades as well as join our membership chat room, you can check out the link down below in the description. Check it out. We'll see you there.